Over the years, I've had the privilege to help literally hundreds of families pay off their home loans 10, 20, and even 25 years early. And there's one decision that can make all the difference in terms of how quickly and how easily they can pay off their home loans. And that is, do I go with a redraw facility or do I choose to use offset accounts? I'm going to show you in this video how redraw facilities are the hidden trap that banks absolutely love and how offset accounts give you boundaries, control, and freedom. We're going to have a look in detail at how an offset account works, how a redraw facility works. We're going to look at the pros and cons of each. And if you hang around to the end, I'm going to share with you the exact bank account structure I recommend and use with all my clients using offset accounts. Imagine shaving years and hundreds of thousands of dollars off your mortgage and never being tempted to dip back into the money that should be building your financial future. But get this wrong, and it is so easy to find yourself trapped in the 30-year mortgage hamster wheel and end up paying the banks hundreds of thousands of dollars more in interest than you really needed to. Now, if after watching this video you would like to learn more about how you can pay your home loan off years earlier and save yourself hundreds of thousands of dollars in interest, then can I encourage you to check out the link in the description below to my Money Boss Academy, where you will find a step-by-step plan to help you take control of your financial future. Okay, so let's get stuck into it. We're looking at redraw facilities versus offset accounts and which one will help you pay your home loan off faster. The agenda, we're going to look at the difference between redraw facilities and offset accounts, how they work and the pros and cons for each. We're going to look at the psychological trap hidden in redraw facilities that keeps so many families stuck financially. We're going to look at why I always recommend offset accounts and why I use offset accounts with all of my clients. I'm going to share with you, if you hang around to the end, I'm going to share with you the exact bank account structure that I use with all of my clients using offset accounts that helps them really get ahead financially, helps them get their home loans paid off super fast. Okay, and then we're going to finish up with a quick summary and recap. All right, the difference between redraw facilities and offset accounts. So, this is your average home loan, $600,000, interest rate at around 6%. This means your annual interest is going to be around $36,000 in year one of your mortgage. So what this means, month one, the loan repayments at 6% are going to be around $3,597. And the scary part of this is $3,000 of this is interest and $597 of this is principal. And most people do not realize just how the banks front load the interest so that they get their profits first, so that they're de-risking the situation for themselves first, and how the principal you pay off is absolutely minuscule in the first few months. And in fact, the principal amount, the amount you're actually paying back, doesn't exceed the interest until you get to about month 223. So that's like almost 20 years in your mortgage. Finally, the principal starts to be more than the interest. So this is how a standard loan works. Okay, so now let's have a look at how this plays out over 12 months if we just made our basic payments on the home loan. So after 12 months, you can see here that our home loan has reduced down to $591,997. So we've paid off just over $8,000 over that 12-month period by making the basic payments. But what if, instead of just making the basic payments over that 12 months, we decided that, hey, we have an extra $1,000 a month, so we're going to pay that also off the home loan. And this is where the redraw facility comes in. So if we make extra payments, again, let's say it's at $1,000 a month, that means that our repayments are now $4,597. $3,000 of that will be interest, exactly the same as it was, but $1,597 is now the actual principal payment that we're making, so an extra $1,000 as we said. What this then turns out is, at the end of that first 12 months, your home loan will be down to $579,997. So it's reduced by the extra $12,000 that we're paying off it. In fact, it'd be slightly more than that because throughout the year, because we're making the extra $1,000 payments, this would reduce. But you can see here that we're now $12,000 ahead of where our home loan repayment said we should be. So what that means is that $12,000, the bank goes, well, you're $12,000 in front on your mortgage. Well done, you. We're going to leave that $12,000 there, though, so that if at any point in the future, things get a little bit tight, you can actually pull that money back out again. But you can see by having that money sitting in the redraw facility, the banks consider it off your mortgage. And as a result of that, if we look at this, your interest for the year ahead will be more like $34,780 instead of $35,520 because of the extra principal payments we've made. So it's already starting to work for you, which is great. Okay, so what I want to take you through now is some important facts in regards to redraw facilities. Now, this is important because it's going to help us differentiate it in a minute from how offset accounts work. So the first thing you need to know is that when you pay extra off your home loan, the banks consider that as extra payments off your home loan. It is a home loan repayment. The second thing is that any money you've paid in advance of your amortization schedule, so that's just a fancy way of saying the rate at which the banks expect you to pay the home loan back, any payments you've made in advance of their expected rate is there for redraw. In other words, you can take it back out. However, I've got a little asterisk there because it's not always guaranteed. Okay, it's not guaranteed. The banks can actually change the rules, which means that those extra payments can get absorbed into the home loan if the banks choose to. And in fact, during the COVID crisis, many of the banks actually did do this and then reworked your repayments. So just be aware of that. The second thing is that when you redraw, the banks consider that as borrowing the money back. So anything you've paid is now theirs, but you're borrowing the money back when you redraw. And that means you don't own the money in your redraw facility. The banks do. They're just giving you permission at this point in time to pull it back out. And then the last thing is, and this is a good thing, is that any money that is in your redraw facility is considered off the home loan and therefore you don't pay interest on it. But I thought it was important just to spell those particular facts out for you. Okay, so let's now have a look at how offset accounts work. So let's just say we have the same home loan, $600,000, 6% interest rate, which means we pay $36,000 in interest or just a little bit less in year number one. Now, if we have an offset account, let's just say this offset account is where we stick our cash reserve and we've got $12,000 sitting in our cash reserve. Then the way the bank looks at this, it says, okay, you've got $12,000 sitting in your offset account, so we are only going to charge you interest on $588,000. So at a 6% interest rate, that means your annual interest bill is just going to be $35,280, which means a saving of $720 in year one. So you can see we've automatically saved interest on our home loan simply because we've got money sitting in this offset account. Now, it's not off the mortgage, it's sitting in an offset account. Now, if we have a look at the facts regarding this, an offset account is separate to your mortgage. That's very important to understand. It's a completely separate, independent bank account. Money sitting in your offset account is considered off your mortgage for interest purposes only. It's not really off your mortgage. It's not legally off your mortgage. It's just considered off your mortgage for interest purposes. You own the money in your offset account. The bank doesn't own the money in your offset account. And the thing that you need to be just aware of, and this is important, some banks sneakily call offset accounts offset, but they're only 50% offset. So only 50% of whatever's sitting in that account. So if we use the example of the $12,000, they would only say $6,000 is off your mortgage from an interest perspective. So just be aware that when you're going for an offset account, you're very, very clear that it is 100% offset. Okay, so I hope this has made sense. Let's now have a look at a side-by-side comparison between redraw facilities and offset accounts. So, redraw facility first. First thing we need to know is that any payments you make, any extra payments, are considered payments back to the bank. So basically, you've given that money back to the banks, so that money is now theirs. Second thing is that, yes, any money you paid in advance can be withdrawn. That is the whole idea of redraw facility. However, the rules can be changed around that. So just be aware of that. The next thing is that any money you paid in advance, of course, is considered to have reduced your home loan and therefore it saves you interest. The money you've paid back is now no longer legally yours. It is the bank's because you've given it back to them. And then the last thing is that typically redraw facilities are fee-free because the banks want you to use redraw facilities. Let's have a look at offset accounts. Firstly, it is an independent account separate from your mortgage. Secondly, it saves you interest in exactly the same way as a redraw facility does. So mathematically, the numbers work out the same. You can have multiple offset accounts, and this is important. I'm going to share with you why in just a moment. Legally, it's your money, not the bank's money that's sitting in that account, and there may be, so this is the downside, there may be some fees. So it is worth understanding what the fees actually are. Okay, so I hope that's been clear. Let's now have a look at the really big psychological trap that comes with redraw facilities. This is why so many families get stuck financially. This is why the banks love redraw facilities, and this is why I, as a financial coach and mentor, absolutely detest redraw facilities. Now, the first thing is that redraw facilities make you feel like you've got extra cash lying around. And because of the nature of redraw facilities, it's an obvious choice for us to go, well, any extra money that I've got should sit in my redraw facility. It should sit in my redraw facility because it's saving me interest while it's there, which makes perfect sense. So that becomes our cash reserve. It becomes our rainy day fund. Anything extra we can pay off our mortgage all goes into our redraw facility, which at this point in time, you're going, well, yeah, that makes sense. But the problem is it makes us feel like we've got extra cash, and it violates the number one rule of a mortgage, and that is that a mortgage should only ever go in one direction, and that is down. Because what happens is that the unexpected will occur. The dog will get sick or injured, or the car will break down, or the hot water system will die on you just before you get to winter, and you need to get them all fixed. And the only place you've got money to fix those is in your redraw facility. So you take that money back out to pay for those expenses. Now the problem, and this is where the psychological component comes in, is once you touch that once, it becomes much easier the second time. And it then just becomes, oh, okay, well, we don't quite have enough money for X, Y, or Z, but we do have money in our redraw facility. And that's when, with every single time we dip into it, it becomes easier and easier and easier to access. So before we know it, we're replacing the car with that money. It feels like free money. We're renovating with that money. We're going on holiday with that money. But what then ends up happening is that our home loan then eventually ends up hanging around for 30 years because every time we start to get ahead, every time we've made extra payments in there, we need it for something or we use it for something. Please understand the power of this. The banks know exactly how this works. The banks know that if they give you access to any money that you're ahead on your mortgage, you are more than likely to find a place to spend it. Because having that money in there feels like you've got extra cash. It feels like free money. And so they know that most people with a redraw will end up having that, having their loan for 30 years. And I don't want that to be you. Okay, so let's have a look at why I recommend offset accounts. Now, this is probably very obvious at this point, but I want to go through it with you anyway. The first one is that having an offset account, it helps you keep your home loan sacred. In other words, any money that I am going to pay off my home loan now stays off my home loan because I've got money sitting over here in an offset account for my unexpected expenses, for my emergencies, for my upcoming expenses. They can all sit in an offset account, which is saving me money in interest off my mortgage in the same way a redraw would be, but it is not my mortgage. So it helps me keep my home loan sacred. The second thing is that you can have multiple offset accounts. So you can have a savings offset account. You can have an offset account, and I'll show you this in a minute. You can have an offset account for your everyday expenses, for your bills. So all of your money, so I think this is the next one, all of your money can be offset against your mortgage. Because with a redraw facility, you're not going to put the money you're setting aside for your bills or your discretionary spending into your redraw facility. Therefore, you're getting no benefit from that money. But when you've got it in an offset account, you can have an everyday offset account with all your bill money, with all your lifestyle spending money. So that's also saving you interest at the same time. And then the money is legally yours. So there's 4 really big reasons why I recommend offset accounts. Okay, so let's now have a look at the ideal bank account structure. How do we use offset accounts to help us harness our cash flow and save literally hundreds of thousands of dollars on our mortgage? But before we get into that, if this video has been helpful so far, please hit the like button because that helps this video reach more families. And please subscribe because every week I create more videos with practical, no fluff money strategies to help you and your family thrive financially. So please hit the like and subscribe. Now, let's have a look at this ideal bank account structure. So what we've got is we've got our home loan, same $600,000 home loan at 6% interest rate, and we're paying $36,000 in interest. So let's now have a look at the 3 key accounts as part of this process. The first one is our savings offset account, and that is used for 3 distinct purposes. Firstly, our savings offset account is where we keep our rainy day fund. This is for unexpected expenses that we simply can't anticipate or budget for. That is things like the dog getting sick, the car breaking down, or the fridge dying on us. Then we also use this savings offset account as our cash reserve. So this is for life events. Things like we lose our job, or we get sick and injured and we can't work, or perhaps we need to take time off to care for a loved one. That is where we keep our rainy day fund, which is ideally 3 to 6 months of your monthly expenses. And then the third reason that we have this savings offset account, the third purpose, is for saving towards big life goals. So maybe this is replacing the car. Maybe this is taking the family on overseas holiday. Maybe we're saving for the kids' education. It all occurs, all that money sits in this savings offset account. Now, any money over and above what we need in those 3 things can be taken and paid off our mortgage permanently, knowing that we are never going to have to touch that money. So I hope you see that that allows us to make progress on our mortgage, but know that we're never going to have to break that golden rule and pull money back out of the mortgage. The second account then is our bills account. So what we want to be able to do is go through and identify what are all of our expenses across the course of the year, and then work out, well, what do they equate to on a monthly basis? So we've got an annual expense, divide that by 12. If you've got a quarterly expense, divide it by 3. If it's a half-yearly expense, divide it by 6. But work out all of our expenses and how much they are on a monthly basis. And then each month, we put exactly what we need into our bills account so that when the car registration turns up, when insurances turn up, when the house rates turn up, the money is just sitting there ready to go. And then the third account here is our discretionary account. So there's things like putting money aside for the holidays or for sports and hobbies or gifts and those sorts of things. So again, if we've identified what all our expenses are, then it's very easy for us to identify, well, how much do I need to put in each of these accounts, which allows us to be very, very purposeful. But the big plus here is that this is just everyday spending money that is saving us money on our mortgage. We couldn't do that with the Redraw facility, but we can do that with offset accounts. And if we have a look at the power of this, and this is what I want you to see, is that between these 3 accounts, I've got $20,000, $15,000, $2,000. There's $37,000 sitting there. That $37,000 is considered by the bank for interest purposes off the loan. Now, legally, it's not off the loan, but for interest purposes, it's considered off the loan, which means that we're only getting charged interest on $563,000, which means that our annual interest bill is only $33,780, not $36,000, which means we've saved $2,220 in interest. Now, you might be thinking, well, $2,220, big deal. But please understand that this is money that you haven't had to earn. You haven't had to work harder to earn it. All we've done is use your bank accounts more productively. But more importantly, I want to show you this. $600,000 is the home loan. We now have $37,000 from month 1 sitting in those offset accounts. The impact of that over the next 25 years is significant because you can see just by having that money sitting in those offset accounts, you are going to save yourself 4 years and 5 months off your home loan. And most importantly, you are going to save yourself $156,000 in interest. You haven't had to earn any extra money. You haven't had to save any harder to make this happen. It's just because we get to use the money more purposefully using offset accounts. I hope that that has inspired you, because it certainly gets me excited, and it's certainly the first step towards paying your home loan off faster. Okay, so let's wrap up with a very quick summary. Firstly, we looked at how mathematically offset accounts and redraw facilities are exactly the same. If I have $20,000 sitting in an offset account and $20,000 sitting in a redraw facility, they will save me exactly the same amount of interest. However, we also looked at how psychologically they're very different. Using offset accounts allows you to be far more purposeful with the way that you manage your cash flow and with the way that you pay down your home loan. Number 3, we looked at the 4 reasons why I recommend offset accounts. The first one being that it helps you to keep your home loan sacred. In other words, your home loan should only ever go one way. Secondly, we looked at the fact that you can have multiple offset accounts. Then we looked at the fact that having those multiple offset accounts allows you to put all of your money, basically benefit from all of your money sitting against your home loan. And then we looked at how money sitting in offset accounts is legally yours, whereas it's not when it's sitting in a redraw facility. And then we finished off with the idle bank account structure. How do I use offset accounts to help me get ahead on my mortgage, to help me save a whole bunch of interest, even though I'm not earning any more money or having to save any more money? It's just by sitting there in those offset accounts, it could save me potentially hundreds of thousands of dollars in interest. Now, thank you so much for watching this video. I genuinely hope that it has been helpful to you. If it has, please click the like button and please subscribe. And if you would like to learn more about how you can take control of your finances, get out of debt, consistently save more money, get started investing, and create a financial future that you absolutely love, then can I encourage you to click the link on the description below and check out the Money Boss Academy. And please remember, it is the little habits and little strategies that you put in place today that can literally make $1 million difference to your future. Take care, and I look forward to seeing you in the next video.